Hello and welcome to the Gold Forecast and News channel, where we bring you the latest updates and analysis on the precious metal market. If you are new here, please consider subscribing and hitting the bell icon to get notified of our future videos. And if you are a returning viewer, thank you for your support and don't forget to smash the like button. In today's video, we will look at the recent price action of gold, which has been consolidating near a 2-month peak, and the fundamental factors that could influence its direction in the coming week. So, without further ado, let's get started. Gold price has been trading in a narrow range during the Asian session on Monday, hovering around the $2.0882.089 region, which is its highest level since December 28. This comes after a strong rally on Friday, when gold broke out of a symmetrical triangle pattern on the daily chart and surged past the $2,050 resistance level. The main catalyst for the bullish move was the disappointing release of the US ISM manufacturing PMI data, which showed a contraction in the business activity of the US manufacturing sector in February. The index dropped from 49.1 in January to 47.8 in February, missing the market expectation of 49.5 by a wide margin. This data reinforced the expectations that the US Federal Reserve could adopt a more dovish stance in the near future, as the US economy struggles to recover from the impact of the coronavirus pandemic. The Fed's preferred inflation measure, the core PCE index, also eased from 2.9% in December to 2.8% in January, still above the Fed's 2% target. The dovish Fed expectations weighed on the US dollar and the US Treasury bond yields, which are the main drivers of gold price. As you may know, gold has an inverse relationship with the US dollar and the bond yields, as a weaker dollar makes gold cheaper for foreign buyers, and lower yields reduce the opportunity cost of holding gold. As a result, gold price soared to the highest level in 3 months, breaking above the $2,050 psychological level and the $2,065 technical level, which was the 50% Fibonacci retracement of the decline from the all-time high of $2,144 to the low of $1,986. Looking at the technical indicators, we can see that the 14-day Relative Strength Index, RSI, has eased from the overbought territory to trade near 69.50, suggesting that there is more room for the upside. The immediate resistance is now seen at the multi-month highs near $2.088, $2.089, above which the $2,100 threshold will be tested. If the buying momentum intensifies, a test of the all-time high of $2,144 cannot be ruled out. On the flip side, if gold buyers fail to take out the $2.088, $2.089 resistance yet again, a brief correction toward the $2,065 support area could be in the offing. A sustained break below that level could expose the $2,050 psychological level, which is also the 61.8% Fibonacci retracement of the same decline. In the week ahead, all eyes will be on the U.S. Federal Reserve Chairman Jerome Powell's 2-day testimony on the Semi-Annual Monetary Policy Report, MPR, before Congress, starting on Tuesday. Markets will be looking for any hints on the Fed's policy outlook, especially after the recent dovish comments from some Fed officials, who suggested that the Fed could cut rates or expand its quantitative easing program if needed. Further, the U.S. labor market report, due on Friday, will also keep markets in high anticipation, as it is one of the most important indicators of the U.S. economic health. Analysts expect the U.S. economy to have added 175,000 jobs in February, down from 225,000 in January, while the unemployment rate is expected to remain unchanged at 3.6%. A weaker than expected report could boost gold price, while a stronger than expected report could weigh on it. In addition to the U.S. data and Powell's testimony, speeches by several Fed policymakers and the ISM Services PMI will also keep gold traders entertained. Also, of note will remain China's Cakes in Services PMI, due on Tuesday, for fresh signs on the state of the world's top gold consumer. China has been recovering from the coronavirus outbreak, which has boosted its gold demand. That's all for today's video. Thank you for watching and stay tuned for more gold news and analysis. If you enjoyed this video, please give it a thumbs up and share it with your friends. And if you have any questions or comments, please leave them below. We would love to hear from you. Until next time, happy trading and good luck.